guys, what is going on? So today's been quite interesting. I mean, Friday for the markets, you know, it's not been so bad. Did get out of my Euro USD trade for 7.5%. Not sure if I covered that in yesterday's video, but I'll cover it again today. We did continue pushing up further, which is really nice for the DXY. You know, this correction over here, I guess it did create a floor, but I was looking for more for 3 touch. Hey, it is what it is. There might be another entry just above it, something like that, and then we take that as the footprint, and then we kind of just read between it. So let's just wait and see. I mean, right now we're coming into the end of the session, so I'm not really going to be looking for a trade today, but we'll be shaping up for next week, so obviously I'll be going through all my pairs again. We also have the JP225, which is also very interesting. So we had the 1, 2, 3 into this and the sell-off, more than enough for him to take a trade in there. I think this was actually quite a nice little bit of price here. We could have looked at something like this, maybe squeeze it in around about there, 200, and I think when it dropped off around about here, you could have probably been in for about 2.5% ish, maybe a little bit less, but overall it was pretty good. And now it looks like we're getting continuation to the upside. I think this right now is quite strategic if you are looking for the buy. Ooh la la, honestly, that is looking good. I haven't taken any trades on the JP225 due to a lack of experience on it, but I have been monitoring it to understand it a little bit better, and yeah, only time can tell, but it is looking pretty nice. I'll just quickly send this quick snapshot over to my mate, and yeah, I mean, you know, this is pretty good. I mean, obviously it's good to go over some charts and just kind of learn what's happening with them and so forth. This was my Euro USD trade, so I did take a bit of a refined entry over here, which you can see on the 1 hour. So we kind of had this corrective squeeze, and then we had a push away, and then we had a pullback up, where yeah, this absolutely had room to do something like this, where I was monitoring this, but then I knew that I would have more than enough room to manage it. So I was looking at something more so like this, and then I thought, okay, fine, if it does come back into this section over here, would I have enough room to manage it? Yes. Okay, so then at that point there, I was a little bit more aggressive. I did have my stop loss probably just under this structure here, and we committed. On a different day, that could have pulled back up and taken me for a very small profit of 1%, or it could have taken me out for a break even. I mean, these things happen, but overall we didn't get that structure. We actually got the commitment, and at the same time I was looking at the DXY, which was around about here. Oh wait, I'll zoom out a little bit more. So yeah, it was roughly around about here, where I could see that price just wasn't committing. You know, price was like just doing all this choppy movement, and I was like, okay, it's very clear at this point that if we were going to sell off, we would have really given us a signal. So we're pulling back up, and then over here we could see on the 15 that it just was squeezing for a 15-minute flag, and then we pushed above. If I did take trades on the DXY, this would definitely have been one for sure. I would have looked at this. I know it's so close to the high, but just understanding what was happening, I think it made sense. I mean, I understand that's risk, but the flag that I took was within this, so understanding all of this, and then I saw how price was moving, and yeah, I just took that trade. It was high risk, yes, and I wouldn't have taken it if I wasn't up on my live account, but because I was up, I was happy to take it, and I understood the risks involved. And then as we pushed, there was another flag over here which kind of was on that low, so I wasn't interested in it, and then we pushed away, and then we created this little squeeze, which once again I wasn't interested in this one at all. I am looking to see if we do create something a little bit in here, and maybe we sell off, I don't know. I'll give it some time, let it do its thing. Perhaps maybe it'll be further in the run, but hey, if I can still get another trade just like this one, that'd be phenomenal. You know, a quick 7.5%-ish was not bad at all. Euro GBP. So Euro GBP is a bit of a one that I think I could look for the trade, because we are now trading back below this override, but we're just in this corrective section here, so you have to understand the risk that comes with it. The real question was, is there enough room to manage it? Yes. Then the next question I had was, well, what time of day are we in? Well, is it really my time where I want to be setting a pending order, and then spreads get really high end of this evening, and then Monday? Not really. So for that reason, I said I was more than happy to wait, and because I'm more than happy to wait, I'm just going to leave it as it is, and then wait till Monday. GBP Aussie, on the other hand, had some good continuation, but I wasn't inclined looking for it. So you had this sort of messier, but there was continuation in here as well, which I could draw on. I think, yes, okay, that's perfect. I thought I was muted. And yeah, we had this, and then potentially you could have looked for the risk on here. I think 5 refined would have been pretty good as well. You could see over here when we pushed, we had 2 15-minute rejections as well. Not really, but we had a 5-minute sort of this bit over here where I think this could have been applicable, and yeah, you could have squeezed it in just around, I think 15 would have been appropriate, and then yeah, you could have easily got away with this as well. I think you would probably have left it just about there on the structure, about 211, let it do its thing, and then I think now as we're breaking above this, as we're coming into high spreads, yeah, about 4% locked in, and then we'd leave it as that and just wait and see what happens, because we are coming into these highs. You want to be a little bit more aggressive, but not too aggressive. And then yeah, that could have easily been a 4% position now in GA, but overall it doesn't really matter. I mean, there's an abundance of opportunity. I don't really see this committing all the way back to the high. It's possible, but I think more than likely we're going to tap into one of these value zone inflection zones, and then inflection zones, trying to get my zones correct. I use the word inflection too much. More so, let's call it the hook point over here, and then we'll see what happens. But this is more so of a hook point. This is just more of an area where we sold off, so a point of value. I just want to see it kind of come to these areas and see, but obviously our high value area is up here and here, so if we do gravitate towards these, I will evaluate very carefully. But I think right now staying on the 1 hour, 4 hour is more applicable, and then I'll kind of get closer as we approach those sections. I think after a proper Sunday sort of reflection on the markets and looking over all of them on a peaceful state of mind twice, then I can kind of get through that. So obviously going through the creative side, which is your left, going through the creative side on one day, and then going through your analytical side on the other, with note taking. So I'm going to be going back to implementing that pretty well, because for some time I was doing it kind of all in one step, because I felt like I was better than, well, because I did it for so long, I thought I just improved. I mean, don't get me wrong, it was pretty good, but I do like the idea of the 2 steps. So I'm going to slowly transition back into doing that, because the 3-step process makes so much more sense. You know, Friday we go through it, Saturday we, you know, map out our charts and everything, get them prepared, and then we know what we want. We formulate our watch list and wildcards, and then soft watch, and then Sunday we go into the annotation state and put everything with annotation notes and so forth. So that's basically the process that I want to go back into. So I'm going to slowly transition into that. This one I'm not too sure yet, it's just still a bit messy. There's kind of this sort of larger flag sort of formation happening over here, so I wanted to see if we get a structured approach into one of these little points here, and then we can sell off. If we get that, that'll be great, because that works in continuation with this larger picture where we had the mini double top just below that, so it is a near miss. But if we do get a flag here, this could be enough to drive it into the low. See if we get an impulsive break, because we're going to accumulate some price in here. If we get the impulsive break, activating the 90% rule, we could then be looking at these inflection points for a larger flag. So hopefully this doesn't become a footprint. It probably won't, but it could. And yeah, the inflection point is here, and then we'll get a larger flag, and then we just look in continuation to the downside, to the 90% rule, and then we'll see how that plays out. So I am looking forward to seeing if GC is the one. New Zealand CAD, phenomenal. Obviously we can see that we had the channel, and then we correctively made our way to the channel and aggressively sold off. I think this would have been a very, very good trade if I was sharper. I think I just kind of got married to the idea that we could continue to the upside, and then by the time we kind of had this, I just wasn't prepared. I missed it, and then yeah, we're all the way down here now. So there was a bit more opportunities, there was this, but I think overall I was more than happy to stay out of the market, considering we're so close to the low, and now we're breaking below it and forming continuation. It's more than likely we could continue in an aggressive momentum to the downside, but massive lesson learned for me. Obviously it was a good reminder to see that obviously, you know, we have channels, and then we have structures leading into the channels, corrective price action in continuation with the channel. So, you know, it was a very, very good smack in the face for that one, and I think, you know, that kind of opened my eyes back again, and to experience the mistrade, it kind of just set that massive reminder in my head that I need to wake up and really, really drill into these analyticals, because you can miss something small like that, and then you know, this is the result. So Over here we can see that, you know, we do have this larger range over here, which makes sense because we are coming from an inflection zone. I'll zoom out to the daily. So this is the inflection zone we're coming off. If we get a larger flag over here, of course this can potentially reverse and come up to here, but more than likely we might see this come into this sort of section here and then sell off, and then we continue to the downside. So I am curious to see that, but we are coming in from a correction. So as we can see, this is one big corrective price. There's no real strong progression here, and this could more than likely be a formation of something like that. And yeah, we would understand that this is in continuation. And I think this is more than likely because of how price is moving. We're not seeing it in a natural impulse correction continuation, and you know, we would see it something like this, but we're not getting that. We're getting just like pretty much this sort of price action over here. So it makes sense why this could be continuation to the upside. But we have to remember one thing, that we did come from an 80% of a corrective move. It's just when we did sell off, we kind of pulled back 50%, and now we've just kind of done this, which kind of gives me the indication that this could be a middle section for something a lot larger. And yeah, at the moment the picture's not entirely clear, but understanding that is very important, because then we could see this as a middle section into something up here, and then we could take a trade. But right now I think keeping that as an idea is very good. Just I wouldn't get married to that because it's too soon and we are on a higher time frame. I think just trade what we have, and what we do have is, you know, this price is now breaking into here. We have a range formulated. Do we just trade within this range and capitalize on it? And then when we break above, we take a message from the market and move forward. For example, we push above, break out of this, create continuation, and we go with it. We'll wait and see. USD yen, there was some potentials for good trades, just didn't get it, unfortunately. We had the 1 2 3 into this. I thought it would push up, push back down, create a flag. We didn't get it. Pushed up, now it's creating continuation and carrying on to the upside. I thought that would be in line with the DXY as well, but I always trade it on its own merit. I think I'm happier trading it on its own merit, just from experience now and what I've been taught. But yeah, overall I think it is looking pretty good. You know, I think if this does correct over here, I mean, it can still come back down for sure, but I would wait for something like that because of how messy it would become. But really and truly, we're not really buying into anything in particular, so this could just really correct, create continuation and move to the upside. So I would stay on the side that we may not be coming down, we actually might be going back up. We did come from a value area, we moved across, we started a bit corrective, but we did become impulsive, and natural form, impulse correction, we're now moving in the impulsive state. We're now creating correction, and we might move again impulsively, and next thing you know, we're all the way back up here. So I would stay sharp with that for sure. The next one I'll be looking at is Euro New Zealand. I think New Zealand is very primed for this 1 2 3. I'm going to stay very sharp for this one next week. It may not be ready just yet because it does need a bit of time for development. But if we look at this in terms of where it needs to go, yeah, it's roughly about 100 pips, 100 odd pips, 123. Where if we look at this sort of week alone, from the 19th, yeah, we moved to about 255. So very possible next week's the week for this one. Could be sick. Just adjust that a little bit. I don't think the forecast changes much just because I can't really see a structured approach just yet. So we'll have to wait and see for the rule of 3. But we have this larger structure. I'm looking for an internal structure though. If we do get a nice internal structure, that will be very, very nice. I don't know so much about this, but it's certainly a structure. So we're getting that nice sort of equal spacing in there, but it's just that middle section wasn't the best middle section in my opinion. If it was a little bit more, I don't know. We'll wait and see. I'll evaluate closer, but I think more than likely I'll be looking for a push and a flag, just given the fact that we have the override. The 1 2 3 we push up. If we reject aggressively from there, back under this override, flags 100% for the way for me. Then we have this over here, Aussie CAD. I was eyeing Aussie CAD up, but because it was on this sort of low section, I just didn't want to touch it. It did have the possibility for the good sell, and I did see it, and I was like, the old me would have been like 100%, yeah, I'll just take this. The moment it tapped into that, and probably just squeezed in 10. And then, yeah, I mean, this trade, yeah, potentially could have run about 1%. Wouldn't be surprised if it came back up and tagged people out. You know, sometimes they work, sometimes they don't, but we did get a bit of an impulsive break here, so we might then see that this comes to 90% rule, gets a bit messy. You know, sometimes these create larger flags here as well, so that's kind of one of the reasons why I was like, okay, this could then just kind of, you know, become something like that and then sell off. And then next thing you know, we have this, and then because I was so focused on that, I get caught in and out, in and out. Next thing you know, I lost a few percent, and it is what it is. So I understand that, but also at the same time, this can sell off. Understanding both scenarios. Here got a bit messy, to be honest. I was looking for a very simple, easy sort of push-up correction continuation. Over here, we kind of just dropped off, and now we're getting messy. Wouldn't be surprised if we see this just sell off and tap into the sort of override zone down here. Sorry about that, it's pretty late for me. And then Kajen, honestly, I could have maybe been able to get into this. So I took 2 break-evens on this, and I'll show you what happened. So originally there was this over here where I saw this 1, 2, 3 over here, and essentially I was looking at this, and then I was like, okay, cool. When we had that rejection over here, I was then looking at something like that, and then we kind of just dropped off a little bit. Oh no, maybe that wasn't the trade. I think I saved the trade. Give me a second. Oh no, I deleted them. Okay, anyway, so I think it was at this point over here, and then we had the next candle. That was it, the next candle, and then it was this trade here where I took this trade. And this one ended up running for about 1% and then came back up and tagged me out. It is what it is. So I then saw this as kind of like, that's the sort of just the point. But then we had the 1, 2, 3 into it. This kind of looks good. And then on the 15th, 15 looked quite clear. And I was like, okay, fine. And then I took this, and then instantly we kind of dropped off, and we ran about 1% here. And then at this point here, I was like, okay, if we reach the bottom of this, because we can still pull up and create something a little bit larger, like that, I don't want to be stuck in here. So I'm going to move and break even, and then it moved a little bit lower and just tagged me out. So tagged me out for break even there, and then I kind of said, okay, leave that one, and then I took the next trade, which was this one over here, because we basically had this whole sort of price in this section, and I was like, okay, fine, I'm quite happy with seeing this as a 1, 2, 3, but when I looked at it in hindsight, I was like, actually, what am I doing? You know, even though it played a little bit, we can see here that it dropped off, came back to low, same situation. At this point here, I moved to break even, and then it just slowly corrected and made its way back up, took me out for a break even, and then I then understood that, okay, fine, this could potentially be it. We had the 1, 2, 3. Maybe I was just a bit premature, but then I realized that this correction is now larger than this impulse, and it's just looking like this could be channeling. There could be many variations. I don't really want to be getting into the price action, and then basically here we are now. So yeah, I think I'm not interested in this, especially because we're trading into quite a late time frame now, high spreads and whatnot. So yeah, there was 2 break evens there. I said after the second break even, I was just like, you know what, I'm gonna leave it now, because the truth is, if I start taking more trades, I'm over trading. I'm probably gonna start making some losses. If the trade wasn't going to go in any of those 2 trades, it is what it is. Like, more than likely, trades, if they're going to play, they're going to play well. And I'll just zoom out to the higher time frame, because if you weren't watching this pair, we can see here that we had this sort of hook point here. We tapped into it. We had a nice 4-hour rejection. We can see on the daily as well, it is a significant area where we could be rejecting from. Still, it's not too late for it to reject, but I'm not interested in it right now. I'll wait for further confirmation. We can see that we had here on the 1 hour, we had this sort of impulsive move away, and then I was basically looking for lower time frame confirmation. But as I kind of saw it on the 1 hour, I was like, okay, that's the line in the sand. If we do push anything above this, I'm just going to leave it, because I was looking for a smaller tight flag, but it just became larger and corrective now, and I don't want to just risk, you know, this just kind of coming all the way back up and then just doing its thing, and the next thing you know, we have something like that, and I was too busy focused on this little bit, I missed out on all of this. So for that reason, I just kind of said I'll take a step back and leave it. And the last one wasn't on watch, right? I didn't take it, but I was monitoring it and it looked phenomenal actually. But the only negative compliments is we have this channel, we didn't quite tap into it yet, and we are in this sort of corrective price action here. We had the 1 2 3 leading into this little hook point over here, and more than likely I thought this would just kind of push up and push back down, but looking at it carefully, we had the push away, same as Kajen, and what was looking nice is on the 15, we can see here that we had the 1 2 3 into here, and right about there was the possibility for a good trade. So that's what I was looking at. But anyway, I didn't take the trade, I wasn't really bothered, but if that played out, I would understand why it played out, because of the sequence of we broke above, we pushed back down, we created a nice tight flag, and we sold off. But anyway, it's lining up for next week. I think it's going to be really nice. If we do get the trades, it'll be good. And then we also have the possibility of this evolving and becoming something like that. So don't be surprised if, you know, we don't get the sell-off just yet, and we kind of evolve, we move into the trend line corrective in the structure, we get a structured approach into it, we evolve the trend line ever so slightly, and then we sell off. So just bear that in mind, that AJ could be very, very, very good as a pair. We can overall see that this is a very sort of corrective price into here. So for that reason, I think it's more than likely that I'll be now looking for that corrective 1 2 3 into this, because I don't want to get caught up on some crappy price action now. To be honest, I'm going to wait for something a little bit more significant, let it come in with a 1 2 3 middle section, push back up, impulsive maybe, and then a sell off. We'll wait and see. But I think for now, let's just let it be what it is, let it be clean, let it be simple, and that's basically where we want to see it. So overall, that's basically what I'm looking at. That's basically the watch list for this week. I think it's been looking very, very good. I think the one that was most beautiful is JP225 at the moment, and obviously Euro USD, which is stunning, DXY, which is also stunning. New Zealand CAD wasn't too bad. I mean, it's just we didn't get the full flag yet, and that was just more high risk. But overall, very, very happy with how today's played out. Haven't taken a loss, which is very good. You know, any day without a loss is very good. Took 2 trades, ended up with break evens. Still quite happy about that. You know, off the bat, off a 7.5% trade, didn't give anything back to the market. So let's see how next week presents itself. And yeah, guys, let's smash it. Let's have a good week.